This week, we welcome Padraic O'Reilly, founder and chief innovation officer at CyberSaint, to discuss similarities between Sarbanes-Oxley and SEC cyber rule. In the leadership and communications segment, insurance firm introduces liability coverage for CISOs. How to navigate a leadership transition, has the cybersecurity workforce peaked, and more. Business Security Weekly starts now.
This is a Security Weekly production for security professionals by security professionals. Please visit securityweekly.com/subscribe to subscribe to all the shows on our network.
It's the show where we explore the business of security to improve the security of business. Your trusted source for actionable insights on leadership, communication, and innovation. Get ready for Business Security Weekly. Your customers' and employees' identities are your responsibility to keep safe. But who is helping you stay safe from identity-based threats? Identity is the key to getting security right. And with the right identity partner, so much more is possible for your business than you thought. From strengthening cybersecurity, to increasing revenue, to reducing inefficiencies and costs, Okta unlocks growth and new possibilities for its customers. Go to securityweekly.com/Okta to learn more about Okta and the company's commitment to leading the fight against identity attacks. ThreatLocker implements a least privileged approach to cybersecurity, blocking every executable unless specifically authorized by your team. This methodology mitigates ransomware, supply chain attacks, and zero-day exploits, and ensures 24/7, 365 protection for your organization. To learn more about how ThreatLocker can help prevent known and unknown threats in your digital environment, safeguard your data and operations from threat actors, and align your organization with respected compliance frameworks, visit securityweekly.com/ThreatLocker. Welcome to Business Security Weekly. This is episode number 373, recorded November 18th, 2024. I am your host, Matt Alderman. Joining me for this interview segment today is my co-host, Mr. Jason Albuquerque. Missed you last week, buddy.
Hey, I know. Hey, it was Veterans Day, also my daughter's birthday, so I always take Veterans Day off. She gets a parade for her birthday, so it's pretty awesome.
Yeah, that's pretty awesome.
Hey, what an interesting weekend in the NFL, right? Kansas City took a loss to the Bills. Couldn't be happier for that. Lions, 52, I think they scored, even though it was just the Jags, but the Lions are looking strong. You know, I said last time I was on, it's pretty crazy that I'm talking about the New England Patriots being the worst in the league and the Lions being one of the best in the league this year.
Right. Yeah, it's a little shocking, but they are playing very, very well.
Yeah.
And look, Kansas City blew it for themselves yesterday.
Oh, yeah, totally.
Way too many turnovers. Like,
absolutely.
Holy cow, what did he throw? 2 or 3 interceptions yesterday?
Yeah, it was 2 or 3 picks. Absolutely. Yeah. And hey, there's a Texas showdown going on today, right?
Yeah. Texans going to probably spank the Cowboys today.
7.5 is the spread. So I'm betting on Houston.
Yeah, me too. This segment is sponsored by CyberSaint. To learn more, please visit securityweekly.com/CyberSaint. Padraic O'Reilly is no stranger to the show. He's been on multiple times. My fellow coworker, chief innovation officer and co-founder at CyberSaint, where he leads our product innovation and AI development. His experience as a Harvard-trained economist, IT risk and compliance consultant, and his rapid exposure to cybersecurity led him to seek out CISOs, CIOs, and boards of directors at global organizations to pursue the answer to the question, how can cyber be managed, measured, and understood like any other business function? So we're going to get into it. Patty, welcome back to Business Security Weekly. Yeah, you know, I love talking to you. That's how I got to know CyberSaint and ended up coming over to join you guys. Today, we're going to talk about the SEC cyber rules and how they're similar to Sarbanes-Oxley. I also want to talk about some of the potential challenges that the SEC cyber rule doesn't have that Sarbanes-Oxley kind of accounted for in the law. But to get people started, let's start with kind of like, what are the cybersecurity rules that the SEC put out, and why should people care?
Yeah, well, to keep it as simple as possible, because there's a few line items. There's 105, 106B. We don't necessarily want to go into all that, but they codified basically incident reporting, right? There's a lot of different standards on incident reporting. Some of the agencies have their own approach to that. That's an 8K filing. But then they created this 10K filing, basically item 106B. And I think the really important thing under that is you've got to talk a bit about how you manage cyber risk. And that includes how you've managed things that have actually happened and what it looks like, in terms of likelihood on risks that just may be there existing, right? They weren't unnecessarily prescriptive in that they didn't say, hey, you've got to use a CSF or you've got to have a risk register that uses this methodology or any of that. And they also sort of emphasized that they want to know a bit about the board reporting. They didn't go with the hard requirements they were initially thinking about with respect to the board, but they do want to know if you have expertise on the board, and they do want to know if there's a cadence of reporting to the board. So they're trying to elevate cyber risk, right, up to the C-suite and up to the board, and trying to wrap some risk management language around it. And the implication is pretty clear that how you handle the financial aspects of cyber risk management impact the share price. And if that's the case, then it's an economic issue, right? And the SEC is interested in the big picture. I think when we talk to enterprise, we get lost in the, is it a business function? How do you guys handle it individually? The SEC is really trying to look at this from the perspective of the efficient operation of markets, right? So if there are informational asymmetries, if the information security team knows things that the board doesn't know and vice versa, there's an inefficient outcome. And that's something you don't really hear talked at the individual company level, but it's important for the economy more broadly.
So Patty, quick question. I mean, we all know that Sarbanes-Oxley had an impact on corporate governance and investor confidence, right? As it stands, do we see the SEC cyber rule having a significant impact on corporate governance, investor confidence, things of that nature, or is there still room to grow and we need to do a lot more?
I think it's room to grow. Yeah, for sure. I think initially when it came out, you saw that we were brought into conversations. It elevated the conversation a bit with some of the companies we were talking to, for sure. They were like, we got to get our act together on this. That was the initial reaction. Then it was a little bit unclear as to what were enforcement actions going to look like, right? And now we've seen a little bit of that play out. We've seen some fines, and the fines have been basically saying there's a huge gap in the information you provided us and what you actually knew at the time. And that's essential to understand when the SEC sends people in. When they send people in on Sarbanes-Oxley, we have an advisor, John Wheeler, who's a part of the first enforcement action under Starbucks. And he said that the big concern with the regulators was, look, there's a real difference between what you're saying you're doing and what you're doing. And insofar as that's the case, investors can't use that information, right? So there's an incentive. I think it's still playing out. The 4 judgments that came out recently weren't huge fines. They ranged from $4 million to about $990,000. But the SEC is going to continue to refine, I think, its approach, unless there's big changes to the new administration.
I mean, with that said, on the show we've talked about kind of where the gaps were, and we've discussed it, right? What from your perspective, what are some of those top tier gaps that they should be filling over the course of the next year to into the future to make sure we're setting a good pathway, right? A good pathway to the future.
Yeah, I mean, what I'd like to see is a little more specific guidance around what it means to report on cyber risk. I mean, they used a lot of the right terms, right? Like likelihood, financial impact, things like that. But I'd like to see a little more specific guidance on those things. And I'd also like to see maybe an enforcement action that relates to, look, you did a half-baked job of cyber risk management, and here's how we think you did a half-baked job. You told us this. This was really the case when we came in and looked at your program, and there's a huge gap between what you say you're doing and what you're actually doing. And I think that kind of an enforcement action would put a little bit more tooth behind it, and the SEC could follow that up with a little bit more specific guidance around what it means to be doing cyber risk quantification.
Yeah. I mean, one of the gaps that we've thrown back and forth a lot is you have to disclose if you have expertise on the board. But at the end of the day, as we're looking at, statistics, it's not moving the needle, right, Matt? I mean, last time we looked at statistics, it barely, I think it wasn't even at 10%. Something significant, but it's not moving the needle to put cyber expertise on the board.
No, and I think that the emphasis on cyber expertise at the board, given what we all know about how our industry operates, we don't have a lot of top tier talent that can speak to the financial side and the cyber risk side. So I don't know that it's all that important that the board packs it with cyber expertise. I think it's more important that cyber learns how to talk in more financial terms about what they do.
Yeah, I think there's a couple areas, right? I mean, 303 and 404 were pretty specific. We had auditing standards published. So we had some rules of the road. And remember, in Sarbanes-Oxley, CFO signs, CEO signs. We're still not there. And I think maybe part of that's because this isn't codified into law, and it's still the SEC driving this, which I'm going to talk about in a second. But what I'd like to see, one of those gaps is that both whoever's responsible for the cyber risk, whether it's the CFO, the CISO, or some other role, legal, whoever, they have to sign. The CEO's got to sign right behind them, right? Let's put names to that, because my fear is the SEC is going to target the CISO for any action, but the CEO has to be part of this equation, right? I mean, he or she should ultimately be signing off that, look, I'm willing to take these cyber risks. I'm going to sign off on this. We don't have that level yet, which I think would close a huge gap from an accountability perspective.
I agree, for sure. And, there's a trend toward, increased indemnification for the CISO. So,
right.
I mean, it's headed in that direction, but you should be able to get other C-suite executives on the hook for this. They're on the hook for all other kinds of risk in the corporation. So it makes perfect sense.
Yeah. And Matt, one of the things you said is, we need this codified into law. Well, we just had an election. And right. I don't know if you saw, but it was kind of bulldozed in one way, right? The election was a little bit of a bulldozer. Yep. I'd love to hear both of your opinion on whether or not that's going to be helpful or whether or not that's going to set us back, because I've heard both sides of the aisle there's a fear that this is going to set us back a little bit.
Yeah, I would say I have a fear it could set us back, particularly, and I'll keep it as apolitically political as possible. But, cyber's a realm where not everything is completely clear at all times, right? So, and there's just sort of with the new administration coming in, there's a general overall push to hopefully, sort of do a laissez-faire, shall we say, approach, which places regulation, at risk, right? And the original sort of design of a free market capitalism. If you read Adam Smith, he never thought that unfettered production and unfettered corporations was a good idea, but somehow it's been popularized as this. If you have any rules at all, you've basically slowed down innovation. So yeah, I'm a little concerned that some of the progress that's been made will. But on the other hand, I'm also optimistic in the sense that cyber risk has become more sort of in the popular mind is just well understood better. I think the CISA has made great strides. I think there are a lot of capable professionals in the government that do this work on the regular. And I think corporations themselves see the incentive to do cyber risk management well. I over the last couple of years in particular. So I do think the winds are kind of behind the cyber risk ship. But there will be some pushback likely. We'll see how much pushback though.
Yeah, I mean, Jason, look, we're going to see a change in who's heading up the SEC. No ifs, ands, or buts about it, right? We know that's coming, right? The question is the incoming SEC head, what's their belief in this structure? Now, I do believe that there are individuals who do care about certain aspects of cyber from an AI perspective, some levels of privacy, that who knows, we might get some interesting codification of law, right? What drove Sarbanes-Oxley, if we think about the history of Sarbanes-Oxley, what drove it is the financials wanted to kind of get into other markets, and they were regulated and not to getting in those markets, insurance and some of the other areas. Sarbanes-Oxley was kind of it was a deal between the financials and getting access to do more, but with that came oversight, right? A little bit. And so what I like about some of those aspects of how some of this is come through Graham Leach Bliley and Sarbanes-Oxley and bringing this together is there an opportunity to do this from a cyber perspective? Because I would love to see it. And I think if you do it right from a privacy perspective, because look, one thing that hampers business right now that people have to realize is I have 50 different breach laws and privacy laws in the US. It would make things a whole lot more streamlined if there was one national privacy regulation that everybody had to be with. That would remove a lot of friction and allow companies to grow. Can I do the same thing, right? So if I do that for privacy, I do that maybe for security, I tie in AI, and I come up with one way to address these big kind of issues at a national level, you won't have states trying to implement 50 different versions of that, which is only going to add slowdown to the economy, right? So I think there's a balance that could be had if you approach it the right way. And I hope we do. I think, look, you're going to see Musk's fingerprints on some of this going forward. He's a big proponent of AI, but he also understands the risks of AI. I think you could see some legislation. And if you tie privacy and security risks into concepts of AI, maybe we do get something consolidated that we can all live with.
Yeah, that would be great. Honestly, yeah, I mean, dead on, right? I mean, some of the struggles we've had are having to deal with 50 privacy laws, right, as
Right.
businesses, and not having one central framework or rules to go by. Just let us know the rules, not 50 different sets of rules. Let us know the rules.
Right, exactly. Well, that's where the PACBO came in on the Sarbanes-Oxley side and set down a set of auditing requirements. Man, if we could do the same thing, it would simplify things greatly. And we're actually going to talk about this in the second segment. There's a couple articles I pulled in, Jason, that touch on aspects of this, right? Because I think the liability piece for the CISO is one that has to be addressed. You can't put all the blame on the CISO when the board and the CEOs are making the final decisions and the CISO can't do anything about it, and then they become the scapegoat. That doesn't make any sense. From a liability perspective, that needs to be fixed, right? And then we'll talk about some of the AI kind of auditing frameworks that CSA is putting out. Like, these are all positive movements in aligning some of the security stuff in the right way. I think gets us closer to the SOX stuff, but again, without it being codified, I still see some challenges.
Agreed, and it's why we're starting to see the mass exodus of CISOs, right? Mm-hmm. I mean, we've had folks on this show, we've talked about it, where they're like, you want to know what? I'm just going to become a consultant. I'm going to become a virtual CISO. I'm going to go out and get the consultative gig because I don't want that level of pressure, right? That level of pressure where it can hit me from a criminal perspective, it can hit me from a personal financial perspective. There's just a lot of pressure out there, and it's the law of unintended consequences. Now we're seeing the mass exodus.
Oh yeah, definitely, for sure. And look, we're going to even cover an article that says, has the security workforce peaked? Like, there's some really interesting stats in that article. So Patty, what I'm trying to think now through is, all right, we see the similarities. We see, well, look, security governance should be important to organizations. It may not fully be there yet. If you're a CISO of a publicly traded company, what recommendations would you give them to prepare themselves not to be the scapegoat?
Yeah. I mean, I think it's simple, yet it's not simple, right? So it's you've got to have some executive buy-in, right? You can't just be an island, right? And if you can get an ally, if it's the CFO, if it's the chief legal counsel, if it's the CEO, we're not, the CISO can do the risk assessment. They do risk assessments. So they have frequently in the Fortune 500, they have, risk teams that operate in these companies. Even if you're just in the Russell, you can find a solution to do some basic risk assessment associated with some controls. They're all running controls, right? If you can then run some financial impact, some annualized loss expectancies across some of the dominant vectors, it's not a crazy thing to go to an executive and say, look, can I show you, what I think some of our exposures are? And if I show them to you, can you at least agree, in theory, that we own this together? And here's what we can do, to lessen these exposures. I don't think it's crazy. It's something CISOs haven't really been fully comfortable with, because sometimes when they take financial data upstairs, they're out of their belly, they're out of their comfort zone, right? And they're open to criticism. But if you take it as a collaborative thing, because sort of, I need your help with this. Am I way off base here? Is there a way we could accomplish this? I did go to it was like a therapy session at Gardner between CISOs and CFOs, and they did sort of a role play, right? And I think it was just while there was some hokiness to the whole thing, it's a good idea, because this is about informational asymmetry. This is about, I know something you don't know that you should know, and it's also about, I don't want to know that thing that I should know, because if I know it, I might be on the hook for something, right? So it's about making what we know as information security professionals easily consumable, not terribly threatening. There shouldn't be anything threatening in saying our potential exposures look like this. We shouldn't, if you want to take that number down, fine, we can take the number down. But it's about starting a conversation and getting buy-in and sharing information.
Yeah, Patty. I mean, one of the things I've said 1,000 times on this show is the best allies you can have as a CISO is the CFO and even legal, right? You mentioned legal as well. Because at the end of the day, it's not about us as a CISO going in front of the executive team and saying, this is the way I want you to see it. This is the way you have to see it. And these are the KPIs or pieces of information that I want you to see. That's not what it's about. It's about, hey, as an executive team, what do we need to see? Right? And one of the best allies you can have in building that story, building that strategy is a CFO. Best allies I've had throughout my entire career. So for CISOs, get a good relationship with that CFO. Learn how the organization wants to see risk. Learn how the board wants to see risk, and then adapt from there. Have the CFO take a look at what you're going to present, right? Help you align financials to that. It's the best approach to take.
And Jason, for some public companies, there is no CISO. It is the CFO, right? I mean, I've been researching the Russell 2000 because I see this really interesting sweet spot, right? Public companies, not super large, not necessarily super mature in their cyber practice. So it's like, who runs security in these organizations? It falls to one of two, either a CFO or chief legal is what I traditionally see, right? And so, but from a legal or finance perspective, cyber is not their first discipline. So how do we help bridge that gap from a cyber risk perspective to help them?
That's when they punt to the CIO, because it's a technical problem, right? That's the immaturity that ends up happening, right? Is because, the CFO or the chief legal officer is saying, you want to know what? Firewalls and EDR and that IT has it, and that's where that gap for me is that when you have a CFO or legal running it, they're automatically going to punt any cyber risk to IT. We know it's bigger than that.
Yeah, I hear you. And I think that's part of the challenge still, because the SEC rules apply to public companies, but yet, and we know this from the Fortune 500, not even half have CISOs, let alone everybody under the Fortune 500. That's why I want to see some signatures. That's why I want to see who's responsible for the cyber risks, and then the CEO sign off on those cyber risks. If we got that just by itself, it would have a major shift in the way I think cyber risks are covered at public companies, both at the executive level and the board level.
I mean, unfortunately, though, I think it's going to take the stick instead of the carrot.
Yeah.
We've tried the carrot. It doesn't work. It's going to require a stick, right? Which is going to be law. It's going to have to be some type of a legal ramification, right? But codified in law.
Yeah, I was going to say, Patty, I mean, $4 million necessarily is a drop in the bucket for some of these, right? It's not a big enough stick.
No, it's not. You do need to incentivize a bit more. And if it is a law, and the enforcement can ratchet up a bit, that'll make it more serious. You're right. A $990,000 fine for information disclosure that was lacking or tepid or not accurate. It's not going to change behavior necessarily.
Right. No, I agree with you 100%. Patty, always a pleasure. Thank you for joining us on Business Security Weekly.
Thanks, gentlemen. It's always a pleasure. Have a good rest of the week.
To learn how to address the SEC's new cybersecurity rule, please visit securityweekly.com/CyberSaint. We're going to take a quick break and then cover the leadership and communications articles for this week.